So yesterday I came out and said the CPI number for today is going to make huge waves in the markets. And what you're seeing right now is the CPI number, consumer inflation, just was announced and it was cooler than expected. Check this out. Even Rick Santelli and the CNBC host found it really crazy on what happened exactly when the CPI number was announced. Take it over, Rick.
Yes, CPI for the month of October up 0.4. Definitely cooler than expected. And 1.3 from June of this year was the high water mark going back to 2005. Up 0.3 when you strip out food and energy. The high water mark there was April of 21, up 0.9. Year over year, up 7.7. Definitely less than 7.9 expected. High water mark there, 9.1 in June of this year, going back to 1981. 6.3 on food and energy year over year, and that was the one many were very nervous about. Last month it was 6.6. That is the high water mark going back to 1982. On initial claims, 225,000, which means it's up 7,000 from a slightly revised 218,000. And on continuing claims, 1,493,000, about exactly as expected. So on the inflation front, definitely a bit tame, but it's hard to say that these numbers are cold, especially year over year. Back to you.
Wow. Rick, while you were talking, that was pretty unbelievable just to watch the Dow futures. I think we had on the chart the whole time. Again, right before this number, the futures for the Dow up by 50 points. Now they're up by almost 650, and it took off immediately. I don't know if we can take a look also at the 10-year just to see what was happening with that. Rick, you were busy reading the headlines on some of these things, but what are your thoughts about this movement that we've seen? Wow, the 10-year note falling below 4%. What do you think,
Huge move in
Rick?
Fed funds also.
Yeah, I tell you, the 10-year note below 4% is huge psychologically, obviously, but I think we get some good insight into the trading community as to what they consider an easing with respect to inflation. So these numbers might look a bit on the warm side just in general, but to watch the equities, to watch the fixed income markets, I think it screams volumes that we are on the right path and investors are going to be piling in if we continue to see these trends.
Okay, so did you see the reaction on how quick the markets reacted? We called it yesterday. I said if the inflation number comes in higher than expected, you're going to see the markets just plummet. I expected the Dow Jones to drop at least 1,000 points if the CPI number came in higher. I expected the Dow to rally about 500 points if it came in better. Well, we saw better, and we went up 700 points. So that's what's coming in right now. The consumer price index, which is the inflation level at the consumer level, actually came down. But the Federal Reserve is actually coming out right now and saying, don't be too premature on what you're expecting from us because we're not going to change policy right on a dime. Well, they said that about a year and a half ago that they weren't going to raise rates, and they did it on an unprecedented level so far this year. But let's look at the economic calendar that came in today. It was basically everything that pivots around the Fed. The Fed controls two things, or they were created for two things. One is price stability, aka inflation. Two is a jobs market that is at its peak performance, okay? So jobs at their max is basically how it's worded, kind of, sort of. So what we're seeing on your screen right here is, let's go break down the CPI number that came in. Remember, the CPI is the consumer price index, the inflation level at the consumer level. So let's break down these numbers. You have core CPE month over month. That's the first line up through here. What that means is core means they pulled out food and energy. Why? Well, you see gas prices going to $6 and then $4 and then back to $5 and then down to $3. It's hugely volatile. Same thing with food. Food can kind of pivot on a dime. Most other things kind of take time to increase in prices. So that's why they rip out those, or they extract those core pieces. The expectations were at 0.5. They increased 0.5. So 0.5% month over month. All right, what was the last reading? Well, last month we were at 0.6. So they expected it to decline a little bit. They didn't expect it to come in at half. Okay, so that's one shocker to the system. The CPI month over month, where we were, last month, considering, versus this month. So what they do is they take a basket of goods and services and they price it out. Okay, they price it out this month. Then they wait for the following month and they take that same basket and they check out the pricings. So let's say food. Let's say they might take bread, milk, and something else. So they take that. So they focus in on 1 month. Then they said, is there any price changes on that basket of goods the following month? So they follow those commodity and other prices along that way. And that's what you're seeing here. So month over month, again, previously reading, they came in at 0.4. Expectations were for this to actually go up 0.2. It actually came in right in line of where we were. So actually 0.2 better than was expected. Here's the shocking number. The headline news previously was inflation at the consumer level was 8.2%. Well, they thought it would ease a little bit to 8. It actually went all the way down to 7.7. So look at this. If this is going to be huge information for the market right now. So let's pivot over real quick and see. We know the Dow Jones is up. I'm interested to see how much more it has gone up. Let's get over to here and see what the Dow Jones is now. It's almost up 800 points. Okay, so let's see what this is doing for the mortgage-backed securities market, the bond that trades on Wall Street that determines mortgage rates. Are you kidding me? They're up 123 points. This means we're probably going to have a decrease in rates today of about 0.5%. Okay, so maybe we're right on the right path. Let's go to over where mortgage rates are. Now, these are mortgage rates published by Mortgage News Daily on a daily basis. These are not my rates. These are not any individual banks or lenders' rates. This is a national average. If you want to check this out, they have a very good website. They post this every morning, and then they update it out throughout the day. You can click down below. There is a link to this website below. Or you can subscribe to my newsletter down below. You're going to get this and a slew of other information. But we're seeing right now, here's where rates kind of closed last night. It hasn't opened yet, but we're probably going to see at least 6.99. Maybe we can get all the way down to 6.875 or somewhere in that range. But here are the top 6 products people use when they're buying or refinancing a house. All right. So if you want to get your own customized quote, what do we do for you? So there's 2 ways to reach out to us to figure out what kind of rates and terms and what kind of program we can fit you into. The first thing is just go to our website right here, therateupdate.com. Give us a call. You can give us a call. It's up here. 844-775-5626, or you can schedule a meeting, and it is right over my head. Just click that. You can schedule a one-on-one meeting with us. That's how we prefer to do. But we have a free service too for those out there that already maybe locked in. If you're locked in, you can get a better rate today. Maybe it depends on when you were locked in. But if you're locked in already or you got a quote from somebody else, we offer a free service. What that free service is, instead of going to those companies like LendingTree and all those companies like that, giving them your data, then they sell your data to 10, 15, 20 different companies, then you're going to start getting inundated with phone calls, people telling you that, they can do the world for you, but they're going to have to pull your credit. So how do you do all this in one-stop shop? Basically, you get your mortgage quote, and you go into it, and you click here. And this is, again, a mortgage quote from another company, because what we're going to do is scan our system with over 80 of the country's largest banks and finance companies, mortgage companies, to ensure you that lender is giving you the best rate. Okay, so how do you do this? Well, you go in, you click the loan estimate tab in there. You're going to fill out this brief information here. Then you're going to upload your loan estimate right into this section right here. Okay, so what's that going to do? It's going to send it to us on a secured system. We're going to then scan your loan to over 84 of the country's largest banks and mortgage companies and get back with you probably within an hour or two with hopefully some great news that we can get you a better rate, lower fees, and or all the above. So check it out. If you like my videos and you like what I do and you want to check it out on podcasts, you can do that now on Apple Podcasts and most of the other podcasts that you listen to. Just search Dan Frio or the Mortgage Update with Dan Frio. Don't forget, we created a credit website for those out there that need or credit challenged. You want to learn more about credit, get free credit reports and more. It's right there. It's credit scores and more. And that's it. Check us out on therateupdate.com. That's my primary website. And I hope you find there what you need to inform you on everything that you're looking for. So God bless, guys. Thanks so much for watching. I'll see you tomorrow. Take care. Bye-bye.